Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glenn Sutherland.
Welcome to a new episode of A Canadian Investing in the U.S. with Glenn Sutherland. This week, my guest is Bronson Hill. Bronson, you want to start off by just giving everybody a bit of a background, a bit of an intro to who you are?
Sure. Yeah, I actually grew up not that far away from Canada. So I grew up in Seattle, and so I went to Vancouver a few times, and I love my Canadian friends. So I love connecting with Canadians. Seems like when I travel, it's like everybody loves being identified as a Canadian because they're not those noisy Americans, right? They're polite, they're respectful, and I had a friend at a Canada Day party recently. We went to that; it was pretty fun. So anyway. Side note, but no, I basically was a well-paid medical sales professional, did that for 10 years, was making over $200,000 a year. And then I just felt like, I want to start getting into real estate because everybody knows we should be doing real estate. And so bought some single family houses like a lot of people do, realized it wasn't getting me there as quickly as I wanted to, just doing the buy and hold single family. And so I started looking into multifamily and raising capital. Fast forward about 6 years, I've raised about $50 million. We've done 2,500 multifamily units. We've done a lot of oil and gas, other buying businesses, debt funds, things like this. And so I just am really passionate. We really have an educational platform around educating people around investing in all different types of assets and what does that look like. And so, but I'm excited to talk with you today.
That's awesome. And like I had this conversation with you briefly before we started. And anytime I ever have like anyone who's like a syndicator and doing stuff, I'm like, my concern is always like, are we going to be able to bring value? Like, because sometimes it's like it's sometimes it just goes over people's heads. Like when they're just talking about buying like a 100+ unit building, 200, 300, whatever size we're talking about, it just goes over their head. And so I wanted to take this on a different path. And you had you just had a book and you had a great insight. And honestly, I think that it's a really important, I don't know, lesson, if that's the right word, but like a good thing people should know before they're investing into someone else's project.
Yeah,
so,
100%.
I should address that into a question.
No, you're good. I'll kind of go from there. Yeah. It basically, like I wrote this book, Fire Yourself, which became an Amazon category #1 best-selling book in real estate, and we've it's been really amazing what's happened since that book. But was written. But it basically, after these couple thousand conversations I've had with high net worth investors, I realized there needed to be some sort of guide on how do people go from, hey, I have a stock or a bond portfolio or a money guy or something like that manages my portfolio, to actually someone who's like actually vetting and looking and finding deals that actually make sense. And really, there's the story about passive income, and I think we should all aspire to be full-time passive investors. But the problem is people think that owning rental houses or an online business or trading stocks online, that's passive, but it's not passive. Well, it's actually active. The more you do or the more you invest, typically it takes up more of your time. And so what I was really confronted with was this quote by Warren Buffett. A very simple quote, but it's very deep. And he says, unless you learn how to make money while you sleep, you'll work until you die. Right. So the idea is like, are the efforts of the investing that I'm doing, is it just simply creating for me another job? And what I realized with my single family is that as I got 3 houses, if I 10x'd what I was doing and got to 30 houses, which was my goal, I would have just basically created myself another job, even though I wasn't the property manager, right? There's so much to kind of coordinate, and the tenants didn't pay, and this issue with the house and things like that. So this idea of passive income is just something that I think for all of us, we can always make more money, but is our money actually working and going in a full-time job, leaving the house and going and working for us so that it comes back with more of its friends rather than us having to do the work for that money, right? And so it's subtle, but I think it's a lot of things. A lot of investors, real estate investors, don't really think about that component of it.
So, okay. On that note, like what's the recommendation? What do you suggest? What's the way to make this passive when it's typically an active sort of, real estate being an active sort of business?
Yeah. So you mentioned, syndication. I think the first time I heard the word syndication, I thought, man, I've heard of like syndicated TV shows or like a crime syndicate or what. I just had no idea what the reference was. But syndication is just a fancy word that we use to basically, how do we structure an investment where we pool funds together to go buy a project, right? So you have the limited partners and the general partners. A general partner is the one who's actually operating it, right? And the limited partner is not limited in ownership, but they're limited in function. So they don't deal with it. There's this idea that like, Nothing is fully passive. I think passive in investing in some ways is kind of a myth, Glenn, because no one really cares about your money the way you do, right? And so the work of a passive investor, there are things that are more passive, and the work of a passive investor is to do the work on the front end, right? You're looking at deals, you're vetting the deal, you're vetting the team, you're looking at, and there's a framework that we use in the book that kind of talks about how you vet the market, the sponsor, and the specific deal, and how that matches up with your goals. But your work is on the front end. Once you invest, then you reach this point where you're really hands off, right? You're not actually the one who's actually doing it. And so the name of my show that you're going to be on soon is called the Mailbox Money Show, right? So the idea that, checks just show up, and we should really call it the direct deposit show, because like it's really, now nobody sends checks, right? It just all shows up in your account. But the idea that, you put money in, you did a little work on the front end, you vetted the stuff, but then, once you're there, it's like the money's coming in, right? You're getting the cash flow, and that's what everybody really wants. But a lot of times what happens is when we're doing flipping, we're doing buy and holds, we're finding wholesaling, we're undervaluing our time, right? Because our time is the most valuable thing. People say they want financial freedom, but really time freedom is the thing that really we need to guard. So is the deal that I'm doing, is someone else actually doing the work to where I can grow my money without taking up more of my time? And that's where I think my book really talks about how do you make that shift to start becoming more passive over time.
Okay. So if you're going to go through that sort of transition from, doing it yourself and to having someone else operate, basically your money for you, whether it's in like a syndication, a fund, or whatever other way they're doing it, do you have any like tips on like making sure these people are, good, maybe that the market is good, that, just because a lot of people, they hear the term, like I should be checking out these syndicators, but they don't know what to check.
Yeah. Yeah, exactly. And in my book, I have a whole framework on how to do this, the chapters on how do you vet any deal of any asset class, right? So what I do is typically, deals will come to us. If you're on a deal list, we have a deal list, other groups do. And so you'll kind of get notified, hey, I have a new deal. Here's a new. And so these deals come to you from all different places, especially if you're in, kind of well networked, you'll start getting deals sent to you. And a lot of times you'll have to stop and say, hold on, like instead of just looking at this deal, I've got to take a step back and just say, well, what are my financial goals, right? Is this my goals cash flow? Is it to reduce taxes? What are my goals? And you say, well, could this be something that could fit? If generally it's not going to work, then just don't even bother looking at it, right? Making sure it fits your goals. But there's this framework I call the deal funnel. This is what I do. It literally is like a funnel. You start at the top, which is the first and the most important thing is I start with the market that it's in. So if it's real estate, if it's single family real estate in a specific market, or multifamily in a specific market, or self-storage, whatever, I try to say, what is that market? Is the population growing or is it shrinking? Is the average income growing or shrinking? Jobs, are they growing or shrinking? What's the demand, or how many self-storage units or apartment buildings are there in this specific area? Do we see this as actually, you can measure all this stuff. You can see if it's actually in demand. You can also do in other things in a specific business. You can say for car washes, how many car washes are there in this area? What's the demand going to be for car washes in 5 years, right? You look at all these things in that specific market. And when you're in a growing market, you can do a lot of things wrong and you're still doing well because you're in the right market, right? The rising tide will raise all the boats. So that's the first thing. If you pass that test, then you go to the sponsor team. Who's actually going to be doing this work, right? I used to think when, I invested with a group, because I invest passively as well, that I think everybody has the same goal. Everybody wants to communicate well with investors and perform well and all this stuff. And I've realized a lot of people want to take investor funds and they never want to hear from investors again. And it's really frustrating if you're an investor and you're like, hey, I have a question or I need a tax form. It's the most frustrating thing in the world. So it's really finding out what are their values, what are the alignments there. You can look at their website, you can have a conversation, you can talk to other investors. And then also from the deal itself, is this a kind of a rinse and repeat deal? Meaning, have they already done this specific deal in that exact market? Or are they trying to go to a new market? Or if they're multifamily people, or now are they doing self-storage? Well, that's a totally different type of thing. So you got to kind of look at the team. The last thing, once you get those through those two, is you have to look at the deal and you have to look and say, well, what are the ways I'm going to make money on this deal? And then what's the one or two primary risks of losing money on this deal? And if you don't see a way that you could lose money on the deal, you probably don't understand the deal well enough, right? Because there's risk in every investment deal. So you have to understand what you think it is. And when I have a conversation with a sponsor, I'll ask them, I'll say, hey, what do you think the biggest risk of this deal is? And they'll tell me something often very differently than what I thought it was, right? So I don't tell them what I think it is. I say, what do you think it is? So then once you get through all that, then at the deal, then you'll say, okay, I like the market. It's a growing market. I like the sponsor team, similar values. I like it's kind of a rinse and repeat or similar. I see what's there and I understand how I'm going to make money and the risks of it. So that's how you really understand. And that could be of any market. You could be in a business, a real estate deal, all different types of deals.
There's a lot there. Wow. Okay.
I talk fast. It's
so
in the book too.
Market, sponsor, and then the deal. So when you're going through this, if you're like, say you're looking at the sponsor and maybe it's a group that you don't really know, or what would be some good questions to ask them, or so that just to understand what they've done, what they're going to do, and how they best represent your money?
Are you looking to invest in the US? Are you looking for a coach that has been doing this for much more than 1 year? In fact, doing this for almost 10 years? Do you want to do one-on-one calls? Do you want to actually have someone looking at your deals and actually thinking and worrying about your projects? If that's of interest to you, I'd love to get on a phone call with you. Go to glennsutherland.com or at CanadianInvestingInTheUSA.com and schedule a call. And we'll just do a quick 15 minutes, see if it works for you.
Yeah, I think it's, I'll actually do background checks on operators too. I didn't mention that I'll do that sometimes on operators, but I'll ask questions like, tell me about something that didn't go well in a deal. And if they have nothing to say, or they kind of hem and haw, either they're inexperienced or they're not being honest. Because, anybody who's been in real estate or any sort of deals, like deals never go as expected. They go better, they go worse. There's things in every deal. Like it can be both in the same time in different areas. So I just really it's like, when you interview somebody, if you feel like you're getting a lot of fluff and nothing really specific, you want to make sure you're actually getting the real person, you're getting the real information. So I think those are things that are very important. I think a good question is, how is this similar to deals that you've done? Like I said, the question of what do you see perceive to be the biggest risk here? Just trying to make sure that you understand that specific deal. And then from a value standpoint, look at their website and just say, hey, how do you guys communicate with investors? What is the process? How do you view your relationship with investors? A lot of we try to say, hey, we're long-term partners with investors. We want people in 5 years to say, hey, this has been a great experience and multiple deals and referred friends and family. We're doing this together. They can reach out anytime. We'll get back as soon as we can, our whole team. And so, I think you can tell when someone's just simply in it for the money and when somebody really has their heart in it, right? And I think that's the thing that you can't really put into words, but I think those are some things that you're looking for: similar values, their heart is in it, they're being honest with you, they're sharing about it. Some even the best operators like, hey, we lost money. This certain thing happened. Like, we've lost money on deals, right? And we talk about that because otherwise, if everything always goes perfectly, it's like, well, I don't know if I can trust you because I don't know if you're being honest with me, right? So, and then I think the biggest way you can vet a sponsor is if you can ask to talk to 2 or 3 people that have invested with them. It's challenging for operators to do it because sometimes, like, you don't want to wear out your best investors. Like, hey, can I have 40 people call you and you get references? Like, it's a little challenging. But if you can talk to 1 or 2 and they say, hey, here's what happened, here's the communication, here's something that didn't go well, here's how they handled it, and I like this, whatever. Like that means a lot. So that's where sometimes those references are super valuable.
And is that what you mean by the background check, or do you actually formally like you're screening a tenant doing a background check?
Yeah, I do. I do background checks. Well, when we work with because we'll work with different partners and different assets. So my goal as well is, I don't want to operate anything myself. I want to be with partners that are actually operating. So I want to be somewhat passive in what we're doing as well. But yeah, I'll do a background check on them, and it's $55 or whatever. There's websites that do background checks, and we'll just look for criminal, just basic, kind of checkbox stuff. But you can also ask them and say, hey, I'm doing this background check. Are you comfortable with that? And is there anything we're going to find on there that's concerning? And sometimes it's not always that the background check, there's something there, but it's like, were they willing to share that with you? Or hey, just so you know, this might come up, or here was the issue. And it's like, okay, great. Well, that's good. I'm glad that you share that with me, right? So, there's that's stuff that I try to do. I don't always do it as a passive investor, but I think the more you invest, I think an operator should absolutely be willing to do that if anybody asks. Like, I'm actually surprised how little people actually have asked. I may have had, of the hundreds of investors I've had, I may have had 1 or 2 run a background check on me, right? I'm always surprised. I'm like, man, I think it should be. I think it should just be a checkbox that you do. You spend the $50 and figure out, hey, is there anything I'm missing here?
Well, typically, yeah, the minimum's usually around 50 grand. So to spend $50 to just make sure that you're doing, some of the times you're just like, why are you skipping the cheap stuff?
Yeah. Yeah, exactly.
Well, I think I have one more question, but like when you're doing deals, right? Or people are investing in deals, what could you suggest to them instead of just like looking at what the pref rate is to try to compare 2 deals? Is there anything else they should be looking at in order to try to make sure they're investing in the right project or with the right operator?
Are you interested in investing in the US? I honestly see Canadians making tons of mistakes, simple mistakes that could be avoided by just a quick phone call. Honestly, I think we should just get on a 15-minute call. You ask me some questions, I answer some questions, and I tell you a little bit about the coaching program. We see if it's a fit. My coaching program is completely different than other people's. What my goal is to help you actually implement the material. All the videos are pre-recorded, so you can just zip through those on your own time. But when you're actually buying property, this is what sets me apart, is that we actually sit down, you do your deal analysis, you have questions, ask me some questions. Let me go through it with you. Let me help you. And this is what's going to set it apart. This is why you're going to avoid mistakes. You're going to miss those little things that you just missed that could cost you a lot of money. Maybe I can see it. Maybe my experience. I've been doing this for a while down in the US. Let me help you. Let's do a quick 15-minute call. If that's of interest to you, go to glennsutherland.com and you can book a 15-minute call. Anyway, hope this is helpful. Thanks, everyone.
Yeah, I think novice investors will just simply look for the highest return on paper. Like, oh, if the 19% return IRR, that's better than a 15% or whatever. But these numbers are just projections, and I think sometimes really sophisticated investors, a 12% with some upside with a great operator is awesome. And a lot of times those 12% end up becoming 14, 15% versus the person who's saying 19, maybe there's some risk in the deal and they lose the deal, or maybe it goes down to 10 or 5. Like, you just don't know, right? So I think sometimes, I think really good deals and operators will say, hey, for example, here's a real estate deal. We're projecting 12% per year. And here's these 3 things we didn't even put in the underwriting that have potential upside, right? There's multiple units that we're going to convert this way. We didn't put that in there. We can add, washer, dryer, whatever. But, we've got the money for it, but we just didn't put it in there because we want to have these additional upsides. So it's like, you want somebody who's kind of looking at a real world scenario and saying, hey, we've got some other things, almost like it's just that under promise, over deliver, right? If I'd much rather say, hey, I'm at 12% and then perform at a 15% than say, oh, we're going to get 19% and perform at a 15%, right? It's just when you're just somebody who does what you say you're going to do. And I think people of integrity like to be more modest in projections and be able to hit that. And I think it's something that happens over time. People get a little more savvy and they say, okay, well, the numbers on the page don't really mean anything, right? They really don't. They just mean what these people are saying they think it could happen. And so you have to really be able to say from your own, perspective of how likely is this? What are the risks? And the more savvy you get, the more you'll see that.
Yep, and I totally agree. And if you're overdoing your projections and then people don't get the returns they're expecting, they're going to be less likely to invest in your next project, right? And typically the best investors are the ones you use over and over again. And if you want to have those people who are the references that you're just talking about, like if they're not going to get the returns that they're expecting, then they're going to tell that to the other people. And it's going to snowball that you're going to have fewer and fewer investors. Whereas if you did something and you actually were above it, like you were talking, under promise, over deliver, people are more likely to keep going because they're like, these are safe numbers, and this is why they're safe because in the past he's produced higher than that. And even sometimes I've seen people where they're building their capital stack where the ratio changes after certain amounts of profit, and you can see that the operator like truly believes that they can exceed this because they're going to make most of their money at the end of the capital stack instead of at early stages.
Yeah, absolutely. It's just, it's something that over time, like you said, I think the best, and this is for anybody who's operating as well, if you're raising money from investors or you have investors, if you can treat them well and you communicate well, and there's 2 things, there's the performance and the communication. The performance can be great. If the communication is terrible, it's not a good experience, right? If either of those are not good, it's not going to be a good experience. But if you communicate and perform well, your current investors they're going to refer their friends and family, and they're going to say, "Hey, man, this has been awesome," right? And so, and the reverse is true, right? If you have a bad experience and you don't communicate, and the performance isn't there, like they're not going to reinvest, and they're going to tell people, "Hey, don't invest with this guy," right? Like, don't invest with this group. So, reputation is very important.
Do you have any final tips before I let you go about like if someone was going to invest or was looking to invest or find an operator or find a project that was good for them? Any final tips that would be helpful for them?
I mean, I think the biggest thing is you have to be in the right rooms. And what I mean, it can be virtual rooms, but it could be, I think, in person. I mean, I pay to be a part of masterminds. We run a mastermind for high net worth investors. And it's just like, when you're around people that want to talk about money, a lot of times people become wealthy. And this is for this conversation, usually people that are net worth of 1, 2, 5, 10 million are like, I want to be in rooms with other people like that are not, once you get to that high net worth, it's like a lot of people, they don't want to talk about money. And if you're weird, if you don't have a diversified portfolio of stocks and bonds and a money person, right? And so when you can actually get in the room with other people, there's that saying, you're the average of the 5 people you spend the most time with. So that's where your best deal flows, your best feedback, your best referrals are going to come from, of just being in rooms like that. So whether it's paying to go to conferences, being a part of masterminds, all this stuff is super, super valuable for investors.
Love it. Bronson, people they like what you're saying. They're like, how do I find more Bronson? Like, where do they go to find you? Where can they find you? I know you mentioned you had a podcast. Maybe just mention that a little bit more.
Yeah. Well, I've got the Mailbox Money Show. I'm going to have you on as well. But I have this guide I wrote. It's actually my 3 favorite investments, my 3 favorite cash flowing investments of 2025. That's the thing in real estate that's really been lacking a lot is cash flow. And so I've got this guide called the Mailbox Money Blueprint, and it's 12 or 15 pages of just different strategies and things that I'm doing now. But I'll send that for free if people text the word cash flow, just all one word cash flow, to the number 33777. Works in US or Canada. You can just text the number 33777. Text the word cash flow, all one word. We'll send that to you. We'll also let you know about future stuff that we're doing, get our newsletter, and just other offerings and things like that. It's the best way to probably connect.
Awesome. Well, Bronson, this was a topic that I think is really important to people to actually do some research and some thought before they invest with people. And I think this is going to honestly help some people just do some better due diligence. So I really appreciate you coming on the show.
Awesome. Thanks. I appreciate it, Glenn. Thanks, man.
That was a nice video.